All right. Hey, and we are live. Hey, everybody. This is Toya, and I'm one of the sister executives in the VASL. And the service that I provide as a virtual service provider is a live stream production. That is what I do. But enough about me. I'm so excited. We have another Toya, LaToya Owens, on today, who is so proficient in professional taxes. It's not funny. She is just really amazing. She's been a part of the community for many years now, and she's our go-to as it relates to all things finance and taxes. So, without further ado, we will bring my beautiful sister on the stage. Hey, Toya.
Hi, Toya. How
Hey.
are you?
Good. Can I just say real quick, Toya Power, Toya Power.
Right.
Oh goodness. I'm gonna go ahead and let you introduce yourself. And again, thank you so much for being here. As a matter of fact, I'm so excited that you're here that I'm gonna do some applause. All right, sis, go ahead. Bless.
Thanks so much for that great intro. So, as Toya said, I am LaToya Owens, MBA. I am the owner and founder of Genasis Enterprises. I started my company back in 2016. So, this March will be 8 years that I've been on my own. I consider myself to be pretty much a tax accountant, which means I specialize in tax issues as far as like tax prep, tax strategies, things of that nature. So I have also have over a little over 10 years of experience in my industry. And that's pretty much it. That's pretty much me in a nutshell. So as you guys know, the upcoming tax season begins on Monday, January 29th, which means the IRS will begin to accept e-file returns. Basically, if you're filing electronically with the IRS. So the due date for that is going to be January 29th. And let's get into it. So today I'll be discussing with you guys, just some general updates that have been brought to my attention for this upcoming tax season. One of those things I definitely want to talk about is the new standard deduction and the earned income tax credit. So as you guys know, inflation has been on the rise now, I would say since shortly after COVID. As you guys know, COVID took a pretty hard hit on a lot of businesses as well as individuals. So as a result, I wouldn't say the IRS, but Congress is trying to implement things in place where you're able to offset some of that agony, as you know, with the crazy interest rates right now, as far as the housing market is pretty down right now. So there's a lot of variables that have been going into this. You've probably been seeing a lot of layoffs. So this is kind of their incentive over the past couple of years to kind of help offset some of that burden for a lot of the American families. So the standard deduction for married couples filing jointly for tax year 2023 is going up to $27,700. So basically, that means if you are filing married jointly with your spouse, that's the standard deduction. And this is a question that I get a lot. What's the difference between standard deduction and itemized deduction? So standard deduction is basically if you don't itemize, which means you're not trying to itemize like your mortgage interest, your property taxes, medical, dental expenses, charitable contributions like to your church or other 501c eligible charities. They're like, this is your flat, like regardless of your income, we're going to give you this regardless if you have the other stuff, right? So that's what a standard deduction is. Like, you're going to get that regardless. Now when you itemize, as I stated, you have to exceed the standard deduction, right? So in order for the itemization to kick in, you would need to be able to itemize at least $27,701 or more in order to offset the standard deduction. So that's really the only way for the itemization to kick in. If you're a single taxpayer or a married individual that's filing separately, the standard deduction is basically the 27,000 amount cut in half, which would be $13,850. Okay, as you can see, that's going to be a small increase from about $900 from tax year 2022. And of course, if you're head of household, the standard deduction for 2023 is going to be $20,800. As you can see, you guys have a huge leg up of $1,400 prior to the tax year of 2022. And as you can see for the married couples jointly, you have a huge increase by $1,800 prior to 2022 as well. Also, the tax year 2023 maximum earned income tax credit amount did increase a bit. It is now $7,430. That's, of course, if you have 3 or more qualifying children. As you can see, for the prior year of 2022, it was only $6,935. So you had a little bit of an increase with that as well. I'm sorry, I'm having to enlarge this so I can see the screen a little better. There we go. So please note, as you guys can see here, for 2023, as in 21, 22, 21, 2019, and 18, there was no limitation on itemized deductions. As you know, those were eliminated by the TCJA, or the Tax Cuts and Jobs Act. For example, if your itemized items, mortgage interest, property taxes, medical, dental expenses, church donations exceed the standard deduction as above, you're still able to itemize. There's really no changes in that, okay? So you are still able to itemize. Now, this is something that I definitely want to make sure everyone is aware of, that could be potentially passed this year. Right now, it is on the floor to be voted on, but it's not law yet. So this is something you definitely want to make a lookout for in case you guys have children, okay? So the current year for child tax credit 2023, the maximum credit is, if your child is under 17, the max right now is $2,000. As you know, that's a little bit of a decrease prior to 22. I'm sorry, for 22. Excuse me. For 2022, as you can see, the maximum credit was $3,600 for each child 5 years old and under, and $3,000 for children aged 6 through 17. Now, you may be wondering, wait a minute, why is Congress taking back $1,000 for something that we originally had for $3,000 the year prior, and for $3,600 if your child is under 5 years old? Like I stated, all of those funds that went out for like PPP loan, COVID, all of those things, unfortunately, that money has to come from somewhere to replenish those, right? So what they are looking at to propose, this is a new proposal, and it is not law yet. That's why I want to make sure that you know it's a proposal. It's the Tax Relief for American Families and Workers Act of 2024. So as you can see, under the current law, the maximum refundable child tax credit for a taxpayer is computed by multiplying that taxpayer's earned income in excess of $2,500 by 15%. This provision modifies the calculation of the maximum refundable credit amount by providing that taxpayers first multiply their earned income in excess of $2,500 by 15%, and then multiply that amount by the number of qualifying children. This policy, if it were to become law, would be in effect for 23, 24, and 25. Now, you may be asking, wait a minute, they stated it's for 23, but we're also already in tax year 23. Yes. So what they can do, if this ends up becoming law, they will retroactively push it back to the beginning of the tax season. Let's say if you're someone that falls under this umbrella, where you're able to take advantage of the additional credit that is not in law now but may become later, if it becomes law, you would just get a retro payment for that, right? When all the dust kind of settles, right? As of right now, like I said, this is strictly a proposal. So once anything changes, I will definitely let Toya know, and I can definitely keep you guys updated on this as the tax season proceeds. But as of now, 2023, this is what you're looking at, the $2,000 for each child under 17. Okay, that's what we're looking at currently. Also, they also have a modification and overall limit on refundable child tax credit. Under the current law, the maximum refundable child tax credit is limited to $1,600 per child for 2023. Even if the earned income limitation described above, which was in excess of $2,500, This provision increases the maximum refundable amount per child to $1,800 in tax year 23, $1,900 in tax year 24, and $2,000 in tax year 2025. So this is strictly dealing with the refundable child tax credit, which means if your child tax credit is able to allow you to get some of that refunded as a part of your refund, if they retroactively send this back to January of 2023, those are going to be the new amounts for each year. So 1,800 for 23, 1,900 for 24, and 2,000 in tax year 25. This is just to give you an overview on a lot of people, I don't think, understand this when it comes to taxes as well. And this is something that I see all the time just from questions that I get asked, how your income is actually taxed. This is basically America, we fall under what we call our marginal tax rate, right? So your first $10,000 is not going to be taxed the same as your last $20,000 or however you want to look at it. Okay. So as you can see, your taxes technically for income tax does not kick in until you hit $11,000 if you're a single taxpayer or if you're a head of household. You see that, right? 11,000. So everything prior to that, basically, you're not taxed. Okay. If you're married, filing jointly, it's going to be double. So it's going to be 22,000 is when the 12% kicks in. So as you can see, as your income goes up, the rate changes. So for the first $22,000, if you're married, filing jointly, you're going to be taxed 12% on that. The amounts between the amounts over 89,450, you're going to be taxed at 22%. So from 22,000 into $89,449, you're taxed at 12%. Okay. Then we go to the next tax bracket. Anything from 89,000, let me see. Yes, anything from 190,000 and $750 to $364,199, you're going to be taxed at 24%. So as you can see, as the income goes up, your marginal tax rate continues to go up. And as you guys know, the max that you can be taxed after, oh, I'm sorry. Sorry about that. I was trying to move my mouse. As you can see, married, filing jointly, the max that you can be taxed is 37%. And that's at $693,000. I'm sorry. Yeah, $693,750. Okay. So that basically what that means, anything you make after the 693 number, if you're married, filing jointly, the max they can tax you is 37%. Okay. But I know for most people, you're probably going to fall between the 12% to the 22%. I'm sorry, the 12% to the 24%, especially if you're like an investor or something like that, where you had a lot of gains and things like that for the tax year, or you're self-employed. All of those things make a difference. Okay. Now, this is one of the biggest things I definitely wanted to talk to you guys about for my business owners. So I want to make sure you guys are paying attention to this. There's a new requirement now called the Beneficial Ownership Information Reporting, or as I like to say, BOI Report. As of January 1st, 2024, this report is now required. Okay. Now, you may be wondering, okay, I'm a business owner. How does this apply to me? If you're an LLC, corporation, one of those items, and I also have a list on the next things that would be exempt. But strictly for my LLC people, you definitely need to make sure that you are aware of this, because this is a new requirement. The penalties are really hefty if you do not abide by the new law. So as you guys can see, they're giving you a whole year to get this report filed. Okay. So the due date is not until actually January 1st, 2025, but the portal opened up January 1st, 2024 in order for you to file. Okay. So as you can see, these are the terms. Any registered company doing business before January 1st, 2024, you have until January 1st, 2025 to do your initial report. Any registered company doing business on or after January 1st, 2024 will have 30 days to file its initial beneficial ownership report. This 30-day deadline begins when the company receives notice that its creation or registration is effective or after Secretary of State provides public notice. Okay. So definitely take a screenshot or jot this down, because this is something that you will have to continue to do as of 2024 to be in compliance. Okay. As a business owner. And on this page here, you can see the companies that are exempt. As you can see, I don't know a lot of people that will fall into this unless you're like a church or something like that. That's why I see the tax exempt entity. So this will more than likely be like your nonprofits or charities, people of that nature that are actually tax exempt with IRS. So as you can see, this is just a small list of like people that would be exempt from filing this list, which basically lets me know if you don't fall under here, you need to make sure you're filing that report. That would probably be a good way to say that. Also, as you guys can see here, accounting firm. Now, as you guys know, accounting firms can mean different things in different states. So if anyone is tuning in and you are an accounting firm, make sure you check with your state to see if you are exempt. Okay. I don't know a lot of people that's going to be exempt though, just because you're an accounting firm. Like I said, that's going to be dealing more with the state level for that. Okay. So think of it like this. If you have a requirement to register or report to your state, I would be following the BOI. That would probably be the best advice I can give you on that. And like I said, if you're unsure, you can always reach out to your state comptroller's office and get more information as well to make sure you're in compliance. And that concludes the presentation. At this time, does anyone have any questions for me? I'm going to make this smaller here so I can see it. Oh, there we go. Oh, let me exit out of full screen. Okay, there we go.
Thank you so much, Toya. I appreciate how concise that was. It was enough information for us to take in and do something about, especially that BOI reporting.
Yes, yes.
So thank you.
And just so you know, I'm sorry, I forgot to mention this. The BOI report, please do not sleep on that. Those penalties are hefty if you miss that January 1st, 2025 date. Based on my understanding and my last reading of it, the penalties can be as much as $500 per day that it's late. $500 a day. That's a lot of money. So please, they're giving you a whole year to do this. Please make sure you get those filed as soon as you can.
And Toy, how does that work? I think I read that for instance, if I created a new business today, I have about 90 days to get it in. Is that correct?
Yes, that's correct. Mm-hmm.
Wow. Okay. So
90 days. Yep.
I'm not trying to give the IRS $500, not even one time.
I know, right?
So, yes, and since we do have some questions, it's about 5 or 6 of them, if that's okay.
Yeah, of course.
Okay, perfect. Thank you. All right, so the first one I got here from my sister Andrea. Thank you so much, sis, for chiming in here. First question: has anything changed for 1099s?
Oh, that's a really good question. So that's something else that I saw a small change for 2024. This is specifically dealing with the reporter requirement. So as you guys know, they changed this. I think it was back in 21, where, you know, if you're a contractor or whoever got paid more than $600 or more, you are not required to issue them a 1099. So it looks like they're looking back at that now. Like I said, they got a lot of proposals and stuff going on right now. But what I've been telling my clients is this: file as usual for now. Okay. You can always go back and amend. You have 3 years to amend your return in case they do some wonky stuff and you need to go change it. So to be in compliance, I would not try to wait on that too much. If you know you made more than the $600, just go ahead and file like you've been filing. That
That's
would be
good.
my best advice on that.
Thank you, Toya.
Mm-hmm.
And so this one is another one relating to that kind of, how do I file my business taxes electronically if I haven't in 3 years?
Okay, so I get this question a lot. Now, I want her to specify when she say business taxes, because I know a lot of people get this mixed up, because you can be self-employed and be a business owner like myself, but your business is filed with your personal taxes. Or does she mean she's a corporation partnership?
That's a good distinction. I think it's good
Yes.
to talk about both, because a lot of us are one
Mm-hmm.
member LLCs, and so it's really out with that.
Mm-hmm.
So talk to both of those, please.
Yeah, so a single member LLC is typically filed on a Schedule C with your 1040, which is your individual or personal return. So in that case, you just get it caught up, right? Well, actually, this is both of them. You would just get it caught up. Now, this is the thing with this: if you're typically DIY, which means you do your own taxes, unfortunately, those DIY software, they don't allow you to go back and back file. You will have to contact a professional like myself in order to get back in compliance, because our professional software goes back as far as 10 years.
Wow. I think that's fortunately, not unfortunate, because
Mm-hmm.
we need to
Yeah.
come to you anyway.
Yeah. So I probably have at least 2 to 3 clients a year I have to back file for. So it's definitely an arena that I'm definitely familiar with. What I can tell you, this is the unfortunate part. If you owe for those previous years, that means the original due date, that interest and penalty has already kicked in. So
Wow.
you're going to get some nasty letters, unfortunately, from the IRS when it's finally filed. Okay.
Wow.
But what I do tell my clients is, even if you owe, just go ahead and file. You have options to set up installment agreements if you don't have all the money. The worst thing you can do is avoid the IRS. That's the worst thing you can do. So I try to tell clients, don't look at the IRS as the boogeyman. Look at them as, just any other vendor, or potential bill. Hey, this is what I made, this is what I owe. Also, when you're also saying business taxes, when you having to back file, make sure you hire a professional. Like I said, I am taking new clients. If you're looking for someone that can go through your taxes to make sure you're maximizing all of your tax savings, because there's a chance you could be missing something where you're overpaying the IRS as well. And that's my job. I like to keep money in your pocket. I'm not trying to give them any more money that they're entitled to. And all of this is going to be legally by the tax code. I'm by the book. So if I'm telling you, we're gonna go straight to the publication section, da 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 da, you're gonna be able to see it for yourself. I'm one of those. and I'm gonna
Awesome.
and I'm gonna educate you on it to make sure you're understanding why you qualify for that savings as well. I'm not just gonna give you the savings and you're like, oh my gosh, she saved me $5,000. Yeah, I did, but I want you to understand how I did that. I don't want you to just think I'm just randomly finding $5,000. Like, the tax code is there for you to utilize, but the issue is, typically when you're not versed in taxes like myself, a lot of people miss a lot of money and they just don't take advantage of it.
I'm so glad that you said that. And y'all, family, yeah, the TurboTax and all that, it does not, it just really does not get all the deductions and so forth. Because I'm a self-filer, I've done that, but then I used Toya before in 1 year, and there's just definitely a difference. We just don't have access to everything.
Yeah, so that would be my best advice is, make sure you're in, and I would say this to anyone, even if you don't work with me, make sure you do your due diligence with your tax professionals. Unfortunately, this industry, we have a lot of rogue tax preparers that are only in it for the money, and they're not doing it to properly educate and make sure that the client is doing their due diligence and making sure that they're on the up and up. So make sure you do your homework. on this, on the professional before you give them your money.
All right, Andrea, thank you so much. Another question. What deductions are allowed if I went into a client building for a couple of months? She has an LLC.
Okay, so that's very vague. Client building. What is your industry? Let's start there.
I think she does the same type of work that you do. Andrea, please correct me if I'm wrong. But
Okay.
she's a virtual business, but she looks like she just was in the client building for a few months, worked in her building for a few months.
Okay, so let me ask her this. Is her home office exclusively primarily where she works most of the time, and then this was just like a temporary situation?
Let us know, Andrea, when you can.
Okay. Yeah, that's going to be a little bit more. Yeah, I need a little bit more insight on that question, because that's a loaded question.
Got it. Got it. This one's considering, this is dealing with the BOI reporting. It says, do
Mhm.
you recommend we have a tax professional do the BOI reporting for us, or is it pretty straightforward to do ourselves as business owners?
Yeah, so I've been telling my client, well, this is something you guys definitely need to know. Unfortunately, I have what we call errors and omissions insurance, which basically means it protects me and the client in case of a human error or something on my part. We're human, things happen. So it protects the client, where my insurance is able to kick in and able to offset any penalties or interest you may accrue because of that mistake. So a lot of our insurance providers, unfortunately, they are not covering us right now for that BOI reporting. So I'm not doing them because of that reason, because I'm not taking that chance. But honestly, I've taken a look at it this week and did my own for my own company. It's pretty straightforward. Um, it just asks you like the date of birth, like things like, just general information, who's the owner or who's acting on behalf of the company. It's going to ask you some personal information. I didn't see anything that was like super crazy where you had to know like a whole freaking tax code to fill out or something like that. I didn't get that vibe at all. It seems pretty straightforward. So I've been telling my clients it's definitely something you can do on your own.
Got it. Thank you.
Yeah.
And right now, I'll really mention really quickly, guys, in our group in the VSL Plus, we're going to be doing that this evening together. We're going to just go live and we're going to go and do that reporting together so we can get it done. Because it seems
Mm-hmm.
pretty easy, as Toya said, but sometimes
Yeah,
we forget
it's
just to
pretty
do it.
straightforward. Yeah.
Yes. So come through and we'd be happy to all do it together with you. Here's another question regarding the BOI reporting. Do I have to file if I'm a sole proprietor?
Okay, so I want to make sure people understand what sole proprietorship means, because a sole proprietorship can also be a single member LLC. Okay, so the IRS recognizes you still as a sole proprietor, if that makes sense, because you have to file the same form, which is a Schedule C. So, question: are you a actual sole proprietorship, which means your name and the business is one and the same, or are you a single member LLC? If you are a single member LLC, you are required to file. If you're just
That's
doing business as yourself, LaToya Owens doing business as Genasis Enterprises, like there's no separation like a LLC or anything, you are not required to file.
very good. We have just a few more questions, guys, and we're leaving here pretty soon. So if you have another question, come on and let us know. This is dealing with 1099 as well. What if a company you work with does not send you a 1099?
So, regardless if the company sends you a 1099, you are still required by the IRS to report all income that's more than $600 if you're self-employed. That would pretty much be my answer for that.
Straight to the point. That's how
Yeah,
employees
the
do.
IRS, they want, look, even if it's a legal act, the IRS, like, I want my cut. So
Yes.
all of this stuff is in the tax code. Look, you making money, we want our cut. That's their philosophy. So
Thank you, Andrea. She says, I'm a virtual assistant bookkeeper. I'm strictly remote in my house. I was doing her billing and payroll. So that's referring to the one that was working a couple of months in
okay,
office.
so yeah, so if your home office is your primary place of business, you can definitely deduct mileage to and from the client's office during that time, and that's round trip, not one way. So yeah,
Awesome.
she definitely needs to calculate her mileage for those days that she went over to the client's office, because it seems like that's not an everyday thing. So that's not considered a commute.
So you can't deduct your commute as a business owner.
No. Well, this is the thing. The way the IRS sees it, if your primary office is at your home, which means a majority of your business is done at home, or you conducting all of your business from home, and you have to temporarily travel outside of that to meet a client or perform duties for a client, that's no longer a commute. Those are business miles, because that's not your everyday place to do your services. But a good industry I like to use for this is like if you're a barber or a hairstylist, you actually have to go to your salon every day to do your services, right? Like, I don't know a lot of people that's doing it out of their home. That's a commute, because basically you can't do your service without being in your salon. So that's a commute. But if it's one of those things like, oh no, I strictly work from my home office to do hair, like you may have your salon or barbershop in your backyard, and you have like a mobile clientele where you have to go to their homes or temporarily go to a salon for like a week or something for like a big photo shoot or something like that. Those are business miles.
From Andrea, I also was included on cell calls, text for dispatch for the truck drivers. Is that a cell deduction?
Yes, if you're if so another question with that is, are you using your business line or are you using your personal line? If you're using your personal line, she needs to figure out the percentage of calls that we're going towards specifically for that. And she can just look at her call log and add that up, like how many minutes or whatever, versus how much she typically talks on the phone. That's how she would figure out the percentage used for that.
Perfect.
Hmm.
All right. Well, it's been about 30 minutes. I think that's good. I think
Hmm.
you've provided a lot of value. So we really appreciate you, Sister
No
Toya,
problem.
your power. She said it was personal, so thanks. Awesome.
Okay.
Okay. So I want to make sure you put your deets up here once again. What's the best way for people to call? Should they call you, email you, go to your website? What's the recommendation?
I definitely tell people the best way to reach me is email. I'm very responsive with my emails. It allows for me to see it immediately, because I am not a person that I cannot stand 100,000 emails. It just gives me anxiety. I was like, when I see an email come in, I'm like, okay, let me answer it if I'm on a call or something like that. But typically, your email is going to get pretty much a same day response for the most part. Now, once we get into tax season, I tell people to give me at least 48 hours, because it's constant things going on with meetings and client consultations and things like that. But yeah, for the most part, 24 to 48 hours, you'll definitely get a response from me via email. And as I stated, if you're looking for a tax professional, I am accepting new clients right now. So if you would like to book me through my website, I try to make it seamless as possible. It allows you to pay your deposit through the new tax client consultation link. Once that deposit is made, that locks you in for that date. If you decide not to go with me, basically you just pay for the consultation fee. But if you do decide to hire me, that consultation fee is now considered your deposit as a new client, and then I just send you the invoice for the final balance. Oh, you're muted, Toya.
Thank you, Toya.
Oh yeah.
As you can see here, guys, she likes to be connected via email. And it is tax season. We're going right into tax season.
Hmm.
So it may be 48 hours, but I've worked with Toya. She's done taxes for me, and she is so responsive and so fantastic at what she does. So definitely give her a ring or email her at LaToya.Owens@genesisenterprises.com. And Andrea, girl, you know it. We definitely will have this live for us in the group and so forth, so we can go back and look at this information. And I'm hoping for Toya to give us more instruction throughout the year as it relates to this, because it's not the only time we should be talking about this kind of stuff, right?
Yes,
So,
definitely. I definitely agree with that. So I definitely want to make sure, like I stated, I will be posting a lot of the updates as far as the proposal and everything for the change in child tax credits. I'll definitely be keeping everyone as much as I can on social media updated with that. But yeah, you can follow me on my business page as well. I'm very big about keeping up with things like that may be coming to pass, things of that nature when it comes to any tax law changes or anything. So yeah, if you follow me on there, you can pretty much keep up with all of the updates when it comes to the tax law.
And we'll make sure we add her business information as well, guys, on both of our pages and so forth. So again, thank you, Toya. Again, guys, we are going to be doing this BOI reporting this evening. So if you are a business owner, a virtual business owner, come meet us at VSL Plus on Facebook in the group, and we'll be doing this reporting together today. Again, Toya, I'm so blessed to know you. I don't know what it is about Toyas in this world, but I don't know. We're pretty fantastic.
Right.
So thank you for being you. Love you, sis. Many
No
blessings. Love
problem.
y'all. Have a good one. Bless.
All right. Bye.